The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
Uh, Well, we're certainly up. We got the little bounce we were looking for. I'm hearing a lot of echoes here. Well, you never know that. Okay. Don't know what's going on. Just hearing loop after loop after loop. And well, I guess I'll just turn the audio off and ignore it. Maybe they'll fix it here in the studio. Anyway, we're up 13.5 points on the S&P cash, 2927.46, as I said last week. We were looking for a handful of things, but number one, I'm expecting the bonds to kind of roll over in the next few days. That will probably push money out of the equity markets. And then we will see that, money out of the bond markets. That'll push money into the equity markets. We also have fund buying. I would not be surprised to see a 3,000 print on the S&P cash by the end of the week. We have far too many people shorting the market. Saw a little bit of that with Apple today, back up to new highs. We talked about a handful of those stocks just going like that. I'm adding a bunch of positions here, both in the long and short-term newsletter. I'm looking at it almost as a free ride, which is we've got about Wednesday, maybe even Thursday, of fund money coming in. Because it's September, it's one of the quarter ones. You got about 10% more money that comes in for fund buying every 3 months. This will be one of those months. Not everybody, there's some plans that have matching funds from the employers, and those get deposited every 3 months. So you get a little extra juice in September, and then again in from the end of September, and then right around the mid part of December, 1st of January. So right now, it's kind of hard to figure out how the market turns south. If the market was weak, they'd hold it up. If the volume does come in today, then we could see a nice move all the way back up to 3,000 on the S&P cash before the end of the week. Don't think that would be way out of the scope of reason, and it continues to be that way as long as everybody keeps shorting every tick higher. I just don't see any kind of pullback at the moment. Now, does that happen on a Friday or next week? You could see that. My guess, though, is that we're going to get the next move up on the backs of people shorting at the highs, and probably some fairly decent positions to look at there. Okay, so what else do we have going on today? Well, like I said, S&P 500 up 14, Dow's up 30, or excuse me, Dow 30's up 200, the Nasdaq's up 7, and the Russell's off 12, almost 13 points. But we had to think that that was going to come as soon as the announcement on the U.S. Canada Mexico trade agreement was made. The next time that will probably move down will be when a deal with China is made. And of course, these deals were only set up to set the precedents of taking every country one at a time. We tried to negotiate with the world as a whole, and of course got royally screwed over. This is going to be one at a time, and always makes sense to take on your competitors or enemies one at a time. So we certainly have that. Okay, what else do we have? Just taking a look here, see if there's anything else I wanted to look at. Do I have that up? I do. We've got a couple of minutes. Someone asking, what do I think of the volume so far today? And, well, we got about 4 billion shares. So as the world turns, actually fairly decent volume. Not the kind of volume we saw in January and February, but certainly better volume than we've had in the last 3 or 4 months as we've gone to new levels and broke out. So far, pretty good looking. We'll look at it. I always want to give the market 3 days when you break to new highs and you have a lot of shorts. Those people need to get out at the highs. And again, as we talked when Tesla started to crack last week, almost always you get a fairly decent signal when everybody quits shorting. If I start seeing that start today, then I will think maybe we don't get to those highs. If we have people continually shorting each and every day of this week, my guess is we only go higher until those shorts give up. And then maybe it'll be a good time to flip the other way. But I don't see it now. Volume is decent. As I said, about 4.1 billion shares as we start the show. And there's just not a lot else to say. We will, let's talk about a little history.
And it's all just a little bit of history.
It is history repeating. And on this day, what did we have? If I can get it here. Why isn't that moving? Come on, move. There we go. In 1890, an act of Congress creates Yosemite National Park. And of course, we got Yosemite Sam with that. Such natural wonders as the Half Dome and the giant sequoia trees. Environmental trailblazer John Muir and his colleagues campaigned for the country. In 1905 comes an act. Break here. I don't. You think?
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Monday, September 24th, TFNN is launching a new updated version of our website. You can still visit us at the same TFNN.com URL, and starting Monday, you'll be able to experience the new and improved TFNN website. If you're a current subscriber, don't worry, your subscription will be automatically transferred. The new TFNN.com will allow much easier access to all your account and subscription information. Get ready for the new TFNN.com, educating investors. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And we're back. Give me a call at 877-927-6648, and we'll do it. Okay, I want to start looking at some charts. We got many stocks out here testing lows on lighter volume the last couple of days, or close to lighter volume. So we're going to talk about those for a little bit. The reason why is it is a tale of two cities. That is a lot of stocks at highs with lighter volume, but just as many stocks at lows testing with light volume, and that normally gets to be one of those things where it's a sector rotation issue when you have basically the extremes of both sides. And I wouldn't be surprised to run into some sector rotation over the next few days. We've seen the big stocks get run today, but mostly that is because they were way too short. As we said the last couple of days, just monster amounts of short positions in Apple that are almost rather ludicrous. So we're going to go up into the 48 million share high. Is it going to break it? Probably not. 229.67 is the September 5th high. You're going to be kind of light, but my guess is that we're going to see other stocks come back in. I don't think we're going to see a we had the opportunity for Apple to fail. It didn't. My guess is it's just going to hang around in this area now, probably till earnings. Boeing, another big boost from and breakout right now from the trade agreements. You need 5.5 million shares to go through, and you already have 3 million shares today. So you got 1.5 million shares to make it. I don't think that's going to be a problem. 5.5 million shares on February 28th, 4.5 million shares on June 7th. A lot of people wanted to go short this thing. We actually shorted it in the newsletter and made some decent money, but man, I wanted to get out of it fairly quick. I hate shorting stocks that are almost virtual monopolies. In this monopoly, with orders out the yin-yang, and even if they gave half their orders up, they'd still be busy for the next 6 years, along with everybody and their dog wanting to get, literally everybody and their dog wanting to get on an airplane and go somewhere as a almost as a right today. But anyway, you're going to have decent volume. You're probably going to at least match that high volume high from February 28th. You're testing it today, but it doesn't look like it's going to come in too light. Let's go out and look just a little bit farther on this one. Yeah, I mean, you had kind of a spike back out at about 11 million shares on February 2nd. So you could make the case that this $350 high back on February 7th was it, but you went through it once, you went through it twice, you're now through it, and the candle looks good into the close today. So we'll keep an eye on that. Okay, what else do we have that I wanted to look at? A handful of other stocks, but we've come back through, I'm going to say 1 o'clock, the volume had been extremely low, but let's go out and look at some of these dogs and where they're coming back into at least support areas. One of the stocks that I wasn't thinking very high of a few months ago, First Solar, these things are at least coming back into their big gap ups. And First Solar, it is the October 27th gap higher that had almost 16 million shares. We're getting back over here on the right-hand side of this chart with a million shares on Friday, 731,000 shares today. These things may not be going up, but they certainly don't look like the market's ready to start blowing chunks, as my nephew would say. So one of these things, or a handful of these things, if I found a lot of stocks coming down there with a volume, it would be different. Of course, in the marijuana business, we continue to talk about GW Pharmaceuticals as the only legal marijuana business. This did break out, did so with decent volume. Today, it's down on 350,000 shares, going up back against the June 1st high that had 345,000 shares. But you broke up and through that with almost 2.9 million shares on the 20th of this month. So you're just coming back to support on there. Nothing that says a lot of these stocks, if you want to talk about kind of long in the tooth with marijuana stocks, I would look for that one to have some fairly high weakness if it was going to fail. And I don't see much other than the pullback to the 164.76 high. Let's see. Let's do this because I wanted to look at a handful of these other stocks. You can email me at path@tfnn.com and take a look at that. XNet, another one out here making a fairly light volume low at the moment with a significant decrease in the August 28th high back down to the low today. You're off about 30% on the energy. August 15th, this hit $7.34 with 2.11 million shares. Yesterday, or actually Friday, 650,000 shares. So a little bit more than a fourth of the volume. Today, 212,000 shares. Now, can these break down? They can, but man, you've got some fairly decent risk reward in a lot of these stocks that haven't been the heroes up to now. And of course, with the sector rotation, especially in the Russell, people are going to be looking for some of these stocks that didn't perform that well, but are setting up with fairly decent support levels. I wanted to look at a handful of other ones out here. We'll see what I had. Other ones, let's take a look at this one. SCHW, Charles Schwab Company. If we were going to take a big header lower, I'd be looking for a lot of volume and a breakthrough the low. We certainly had that volume on Friday, at least the same volume that we had going into the July 6th low with Charles Schwab, SCHW. You've got a high volume low here at 47.94 with 13 million shares. Now, you did have kind of a big day earlier. Where is that at there? That went down 16 million shares, but actually kind of a little reversal day and went back higher from there. Now that we're back down to these lows of what do we have? Friday, 8.9 million shares. Today, just 5.5 million shares. So there are some of these that are getting kind of close to Polaris Industries. This one's testing its 101 support area, February 6th, 101, 1.3 million shares. Got into it with 970,000 shares on April 27th. Now on Friday, you got into that with 526,000 shares. So, when you talk about beating out some bottoms, it's pretty easy to see that these things are pretty high risk reward ratios. They're either going to hold this or they're going to break in the next couple of days. My thinking is that they're probably going to go higher. We'll be back in a minute.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're going to go on from Polaris to PetMed. Again, a lot of these stocks making some fairly light volume moves into previous lows. PetMeds, I kind of been waiting for this thing to come back and test the 17 million share low from August 23rd, $30.95. Got into it with 1.6 million shares on May 8th. Just 300 some odd thousand shares so far today. So a lot of these things are fairly close and a nice big consolidation. This one from about 31, 32 bucks back up to a possible 57 bucks. You had the very big breakout going back to May 8th of 2017, and it's been in this consolidation range. If this thing continues to move, it has one of the better looking charts out here. 31 bucks is interesting. It may not get back there if the market starts moving higher, though. On Semiconductor Corporation, ON testing its December 5th, 2017 low at 1866, 9 million shares. And when we look in the last handful of days, 6, 4, 5, 5, 2, 2.5 million shares. So there are some semis. Let's take a quick look at the SMHs. Still no real sign. This thing's just in a trading triangle. You did have a small spike, which you could consider a false break to the downside to 102.16, but not not enough really. Especially today, you'd like that probably at least the semis looking a little better. And of course, Nvidia is rocking the Casbah and doing so rather spectacularly. Now, the question is going to be, does it have the volume today to break out? And the answer is it already has. Got to 262 with almost 12 million shares going through the September 4th high that had just under 10 million shares. So you're going to break it. You're going to break it with some fairly decent volume. You had a lot of juice on Friday with 17.7 million shares. This has led the SMHs before, although I think it may be a much kind of different market than it was last year. NYMT, New York Mortgage and Trust, making some lows around the $6 range. 16.5 million shares on August 10th. Got into it to last week on the 26th with 2.4 million shares, then had 1.2 million shares, and then Friday 1.7 million shares, and today is 600,000 shares. So like I said, a lot of these stocks, you're going to need something big, I think, to break them lower. Then we'll take a look at that. Yep, IWM is weak, but that's what you would expect. They went up on the idea that they would do extremely well in a market that had trade barriers. But guess what? A lot of those went away today. The next big one to fall, of course, would be the EU or China. But that's exactly what you would think would happen when these they went up on the trade issues, and now they will go down on the trade issues. Netflix right back up here. Now, if you are thinking extremely bearish out here, you do have a chart in Netflix that looks rather bearish today. I still dislike the fact that it is, let me say, problematic. Let's take a quick look at this NFLX. I think it's another one of these big stocks that has fairly decent short interest. And I just kind of disliked it because back on the 25th, 30% of the shares that day were shorted. Now you're back into about 15 to 19% over the last 3 days. But that's still problematic. But then when you go to look at the short interest, not that bad, probably a lot of puts on it, but you still have 17.5 million shares short in Netflix. And man, is the worst thing you can do as a shorter is be short with everybody else short. Unless the stock literally bursts on fire, it is horribly, it is a horrible existence, let me put it that way, to be short, heavily shorted stocks, unless you're just going to put it away and look for it for a year. Same thing, when we look at Tesla, I'll just veer over to this. Exactly what you don't want. We had 20% of the shares on Friday were shorted. And just actually back at the $300 mark on the 25th, you had half of every of every share, or half of, well, would it be half? Half of all shares. Let me say it that way. Half of all shares were shorted during the day. It doesn't mean everybody went home short, but it certainly means that a lot of people were getting ready. I think someone knew that this was set up. I don't know if they all did the right thing and covered on Friday. It would have been the right thing in retrospect. But again, you have monster short sale numbers in this one. And of course, in this, you've got, what is it? That's 1, 2, 3, 34 million shares short in Tesla. So just remember all these monstrously short stocks, they have a problem for me. And that's why I suspect that we'll see the top come in when everybody gives up shorting these stocks. Let's take a look at Maxim. Okay. What do we have out here? Okay. Okay, just looking at a few stocks here. Maxim Integrated Products tested its low on Friday with of $56.01 on September 23rd. So on about 5.6 million shares. Got into it on Thursday with 3.1, Friday 2.3. You're up a little bit with just a little doji out here. Energy was probably a little bit too much for me on the way down on the 26th. But certainly these things are down into these lows, and we're not seeing the volume, at least so far today, expand. Magic Investments almost have a little dark shadow on Friday's little move higher, but certainly pulling back on light volume of 1.6 million shares to the 4.3 million shares higher on Friday. That's MTG for the symbol on that one. Again, you can give me a call at 877-927-6648 or email me to MT Bank Corporation. MTB is the symbol. $165.53 for the July 13th low with 2.2 million shares. Into it on Friday with 921,000 shares. Little reversal today, but just 361,000 shares so far. We'll be back. Got a lot of stocks to look at today.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks. Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And someone brought up in the den, DocuSign is one of the stocks I'll be watching here over the next year for the Tech Insider. The downside, though, is you don't want to get into these things before IPO lockup, because when all those shares become available, everybody gets nervous and they start trying to get in and sell this one. You had a pretty good indication on on this August 28th high where it tested the two previous highs in the 66 buck range with half the volume. But the lockup date is October 24th. So you've got, what, 3 weeks? Not uncommon to see everybody amscray before those things go out. So, you got a stock that's only been around for a while, got to know your lockup date. And, of course, the first 3 months, generally there's kind of a little bit of a honeymoon. And then everybody starts worrying about who's going to sell in the next 3 months after that. We had one out here that was, what was the name of it? I will find it here today. Calm, C-A-L-M. It missed on earnings today. Did find support back at this gap that goes around for a while. This gap goes back to April 3rd of this year. You had 1.1 million shares. You got 2 million shares already, but it did kind of bounce and act as support off this. This is Calmain Foods, C-A-L-M. I have to say that most of the earnings out so far, though, have been rather disappointing. So we may see this trend continue in some stocks, but not all. Let's take a look at some other ones. Miller Herman came out a little bit ago with its earnings, and it's back to its support. Earnings on the, July the 3rd, 2.2 million share gap higher. Got into with 270,000 shares on September 18th. Today you got about 200,000 shares. So again, a lot of these stocks just kind of winding around. Pretty good signal that you didn't have the volume to go higher on September 20th with just 1 million shares compared to the 2 million share high on July the 3rd. But again, at the same point, you're not having volume come in to that one. Mohawk Carpets. Let's go back to this. Mohawk Carpets. Let's see. Back here. Making a little low. A lot of these housing stocks look like they found some level of support. This one, 177 low on July 26, came in with 7.4 million shares. Friday came into it with 1 million shares. Today you got 400,000 shares. So again, I'm looking for that volume change significantly by the end of the day to tell me that we aren't looking at a lot of these stocks that are coming into some fairly decent support. MB Financial, MBFI, this gapped up on 8.4 million shares on May 21st. tried to get into it with 900,000 shares on July 19th. Last Thursday, 285,000 shares, 565,000 shares on Friday. Today, kind of rolling back in here at 293. About $45 would be the buy on this one, and actually not a bad looking chart as we see it now. Okay, carping is out, wood is in, huh? That's the comment. Macy's, one of the retail dogs, actually went higher, tested its previous June 7th high that had 25 million shares at $41, went above it and instantly closed lower than that on earnings back on, what is that, the 15th of September, excuse me, 15th of August. Did so on 45 million shares. This has just been going back down on very light volume and going sideways back into the support on these days where it started going higher back on June 4th. But again, not a lot of volume coming in these either. If everything was going to hell in a handbasket, I'd look for some of these stocks. Now, maybe do they jump the creek? Well, maybe they could, but certainly not seeing increasing volume back at some of these lows. LNG. Okay, Cheniere Energy. And hang on a second. Energy, let's see. You got about 2 million shares so far going through to the June 26th high. Is that right? About 1.3 actually, 1.4 million shares today. You had 2.5 million shares on the 26th. That's comparing it to the June 22nd high at 69.50 for Cheniere Energy. So mostly around natural gas. This one shows that this one's had a fairly good run from that $58.45 low back on August 3rd, and now running into some fairly decent resistance. What do we have? Okay. Lajola Pharmaceuticals, LJPC. This one's making a fairly decent looking low out here, doing the consolidation after coming down off the $38.39. We look at the August 15th low at $20.25 with 630,000 shares, got into it with 360,000 shares on September 17th. You had a little bounce, and now we've got about 120,000 shares. So yeah, there's a bunch of stuff to look at here today. You can both say higher and lower. The proof is going to be in the pudding, and that's going to be the last 30 minutes of the day where we start seeing the first hints of fund buying come in. See a few other ones. Okay. Some of these biotechs look like they've got some support around these areas. Okay. So now we've got the Spider Trust series. The KBE had its high volume back on April 2nd with 3.2 million shares. Got into that with 1.85 million shares on July 2nd. Rallied a bit. Now it's coming back down so far today, 1.9 million shares. But you need it to go through 46.12 and then close back above it. So we're still a little shy on that one. But the KBE will be one that you want to watch at the close today and see how it does. Oh, mostly across the next couple of days. Okay, JCP to JCPenney. Even this dog with fleas looks rather interesting. You spiked down with 24 million shares yesterday and then closed back above the August 17th low that had 46 million shares. So, and you did so with half the volume. So a lot of these stocks that have not been the winners in this last rotation in the market are making some fairly decent lows now, and there aren't a lot of sellers. Keep an eye on the dogs if they've got no volume and they've got no fleas. We'll be back in a minute.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Okay, what's going on out here today? And I suspect the answer is that you want to be looking at the TLT. We had the gap down today. My guess is that we are going to jump the breakthrough ice, I think is the analogy that James Wyckoff said, and that is that 115.27 low going back to May 17th. In fact, if you look even farther back, there's 114.93. As it approaches that, I suspect that we will have more money come out of bonds and go into the equity markets in the next few days. But we've got our first gap here. Maybe it gaps down tomorrow or Wednesday, but that test, I think, is going to tell us a lot. But we're probably going to see that money roll out, and it's going to go somewhere. It's going to go into crude. Is it going to go into equity? My bet is it's going to go into equities that have been ignored, but are at fairly decent support over the next few days. If you're thinking about going short, I'm thinking that maybe Friday might be the first day that you'd see that window. I can see both sides of it. But as long as everybody keeps massively shorting all the big stocks, I have to think that we go higher. And that's what I'll be looking for. Anyway, TLT, first thing I should be looking for in the morning is whether that has gapped through those lows and whether or not that blows that apart. IMAX. Take a look at this one real quick. Maybe something else out here. We looked at GW Pharmaceuticals. Oh, that's what it was, DSW. Wanted to look at this one because it was one of the retail stocks that has done very well. Wanted to see how it had hit its previous highs of August 28th that had 15 million shares at $34.02. Got into it with 3 million shares yesterday. Today about the 800,000 shares. So kind of a Rorschach test. If you want to go short, there are a lot of stocks up at highs with light volume, a lot of stocks at lows with light volume. In the meantime, sell when you can, not when you have to. We'll see you here tomorrow. Same bat channel, same bat time.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.